What's going on, TK Master Wealth Builders LLC? And let me put out a disclaimer and let you know that I am a licensed professional. I'm licensed in multiple states. I am relegated to the rules and regulations that apply to insurance in all 50 states. And I do have a fiduciary responsibility to guide you in the right direction when it comes to financial planning. So today I wanted to talk to you about indexing, and I hope that you learn something and you get with any financial professional. If you don't feel comfortable doing business with a stranger like myself, the idea is to teach you something and make you think about getting insurance. So indexing is a strategy within insurance that basically is like an ocean full of boats. And instead of investing in one boat, you invest in the entire ocean. So as the tide rises, you win. And when the tide lowers, you lock in your principal so that you never lose money. It's sort of like going to the casino and always have a winning hand. In the stock market, your principal is always at risk. In insurance, your principal is protected, it's guaranteed. It's what we call a 0% floor. It just means that you're never going to lose and that you're always going to gain when the market gains. So indexing is a strategy that applies to multiple products within the industry, but not all products are created equal. So understand when you structure your policy to ensure that it is structured properly. There are multiple different indices that you can participate in, and the smartest strategy is diversification within insurance and diversification within your indice participation. In other words, you want to evenly spread your participation in whatever markets you have available. So that leads to annual review. So you want to have a physical review of your insurance policies, which can be considered a financial checkup. Every year, whether your agent contacts you or not, you want to do a financial checkup because one, the market changes all the time. Products advance, benefits increase, and a product that you purchased 10 years ago is not the same product that's currently on the market. And then products vary by company in terms of the experience of the agent, how it's structured, and what that company offers. I'm, as an example, contracted with 40 different carriers, which means that I have the ability to tailor your needs based on your specific situation, your goals, and what is your long-term approach. So I want you guys to think about coverage. Think about advancing beyond just right now. Insurance involves leveraging risks and having a company on your side in the event something happens to you. You want to have the ability to not worry, not GoFundMe, and you want to have some aid when you go through an event that requires you to tap into your policy. Example being long-term growth. There's two different strategies when it comes to insurance. I don't know if anybody ever talked to you about this, but there's the retirement strategy, and then there is the coverage or long-term growth strategy. So in other words, you have components like deferred index annuities that focus on retirement. It focuses on you receiving a higher yield than what you can anywhere else. And it also gives you the opportunity to protect your principal so that Unlike in the stock market, you never lose any money. So that's the main difference. And that's what I hope that you take away from this video. If you've never looked at insurance as an investment vehicle for retirement, there is a component that focuses on that. When it comes to IRAs, when it comes to annuities, those are areas that allow you to make more than the typical $200,000 that's in the average 401k by the time you retire. And then we have the insurance coverage portion, which is the long-term growth, because your cash accumulates in an IUL where at some point you can take a loan against it, which is tax-free and allows you to benefit from your life insurance policy. If no one ever sat down and explained that to you, I wish when I was in my 20s, someone would have told me. So the purpose is to educate you guys on something you probably don't know about, but it's definitely something that could benefit you long-term if you listen and take it serious. If you don't feel comfortable doing business with some stranger in a t-shirt on the internet, then find a insurance professional and get a deferred index annuity, get an IUL, make sure it's structured properly, make sure you diversify in your indexes, and then participate while you're young so that you can have time as an element to help your growth, your compounding, your leverage. Because leverage is the new way that is available to the public that wasn't before. I actually had to fight to get this information. In other words, I sought after it, studied it, and then became licensed in this lane. So no one ever sat down and said, which I wish 10 years ago when I was a contractor in Kuwait, that someone would have sat down and said, hey, if you invest in a 5-year retirement plan, by the time you leave Kuwait, I was there for 7 years, your financial situation would be in a completely different status. That's something that no one ever sat down and told me, but 5-year plan is the perfect strategy for people who make over $100,000 for the past 2 years total combined household income, because you only pay into the IUL for 5 years. And then after 5 years, you're done paying into it. And then a bank is going to loan you $3 to every $1 you put into the policy. And then after 15 years, the bank takes their money back, and you have leveraged and compound through indexing way more than you could make anywhere else. And that is something that I wish somebody would have told me. So if you take this information serious, if you qualify to participate in the 5-year plan, then use the link in my bio. Let's schedule a one-on-one Zoom. If you don't feel comfortable doing business with me, then go to any licensed insurance agent and ask him about an IUL. Ask her about a deferred index annuity. Get coverage for your family so that you don't have to beg people to go fund me when something happens, because all of us, tomorrow's not promised. All of us at some point will have something happen to us. Whether you not have coverage, that part is up to you.